We've covered the basics of price action, including candlestick patterns and chart patterns. Let's diving into a fundamental but super important concept: support and resistance. Support and resistance levels are crucial in technical analysis, but many beginner traders don't use them correctly. Understanding these levels can give you higher win rates, so let's break down how to identify and use them effectively. First, let's define what support and resistance actually mean. Support is a price level where an asset tends to stop falling, while resistance is where it tends to stop rising. Knowing these levels can help you spot trade opportunities when the price approaches these points. Take a look at this chart. Here we have a resistance area. See how the price rises, hits this level, and then falls back down? If the price approaches this level again, there's a good chance it might drop once more, creating a trade opportunity for us. One mistake I see beginners make is overcrowding their charts with too many support and resistance lines. This just makes things confusing. Remember, support and resistance are here to make trading simpler, not to complicate it. So what exactly are support and resistance levels? There are two main types of levels: key price levels and whole numbers. Let's understand them in the real chart. In this gold chart, you'll notice some clear support levels where the price has reversed multiple times. You'll also see that after hitting this support, the market moved up, reaching the 2700 price level, and then came back down to where the upward move started. Key price levels: areas where lots of buying or selling happens, moving the price sharply in one direction. Whole numbers, like 25,000, 27,000, etc., where prices often react significantly, known also psychological levels. Now, if you're an intraday trader, you might want a bit more precision. After you've marked the zones on a 15-minute chart, switch to a 5-minute chart. Here, you can wait for price to reach your resistance or support zone, watch for a strong candlestick pattern like a bullish or bearish engulfing, and then enter with confidence. Let's look at some examples. Here is the gold chart. We draw support and resistance lines based on market reactions. Then, as intraday traders, we move to the 5-minute time frame. After establishing support and resistance, we need to wait for a break of either level. As smart traders, we follow the trend, so here we'll wait for a breakout on the buy side. Before the breakout, we can spot that this line is just below the support level, which is called a sell trap. As smart traders, we need to avoid these types of traps. The best way to do this is by being patient, waiting for a quality entry, and following your trading strategy and rules. Once we identify a trade setup, we need to manage our risk. Place the stop loss just below the support zone if it's a long trade, or just below the resistance if it's a short trade. For targets, let's look for the next key level above, depending on the direction of the trade. And that's how we apply support and resistance to a real chart. With practice, spotting these levels will become second nature. Remember, the goal is not to blindly follow any level, but to use them with other confirmations to make well-informed trading decisions. Now let's move on to the next example. In this chart, we can see that the market is creating higher lows. As the price moves, it starts to form clear support and resistance levels. Now, if we wait for a few more minutes, we see that the market breaks down from the support level and starts a sharp sell-off. This breakdown from the support level is significant because it tells us that the buyers who were holding up the price at this point have lost control, and the market sentiment is now turning bearish. Remember, identifying these key levels of support and resistance, combined with the market's behavior, helps us make more informed trading decisions. In this case, we can look for potential short opportunities once the breakdown happens, with our stop loss above the previous resistance level. But sometimes, a big sell-off can be triggered by new events or news. As smart traders, it's important to understand both technical analysis and market-moving news. Try this out on your charts and let me know how it goes in our Discord. If you want more live chart analysis, don't forget to like and subscribe. Until next time, happy trading.